Have you ever wondered why wealth seems to skyrocket after hitting $100,000? It's not magic. It's a combination of several factors that work together to create a powerful momentum. It's the power of compounding and strategic financial decisions coming together. When you reach this level, your money starts to work for you in ways you might not have imagined. Reaching this milestone is a significant psychological and financial accomplishment. It boosts your confidence and opens up new avenues for investment and growth. It unlocks a world of opportunities for accelerated growth. You can diversify your portfolio, invest in real estate, or even start your own business. In this video, we'll demystify the path to financial freedom. We'll break down complex financial concepts into easy-to-understand steps. We'll explore the magic of compounding, showing you how your money can grow exponentially over time. We'll also discuss practical strategies to reach $100,000 faster, including budgeting, saving, and smart investing. And the importance of asset allocation. Diversifying your investments can help manage risk and maximize returns. You'll learn about leveraging real estate, navigating economic cycles, and identifying the best times to buy and sell. We'll also cover the role of financial technology. From apps that help you budget to platforms that offer investment advice, technology can be a powerful ally. Most importantly, you'll discover how financial discipline and smart strategies can help you achieve your financial goals. Consistency and informed decisions are key. This is your roadmap to unlock the secret of explosive net worth growth beyond $100,000. Stay tuned as we guide you through each step of this exciting journey. Please hit subscribe to support us. It is free to you, but it will help us tremendously. In return, I will bring you more refined research and respond to all your comments. Imagine a penny doubling in value every day for a month. It might seem like a trivial amount at first, but the results are astonishing. On day 1, you have 1 cent, just a single penny. By day 10, you have $5.12. Still, it doesn't seem like much, does it? Doesn't seem like much, right? But don't be fooled by these small beginnings. Now, fast forward to day 20. The magic of compounding starts to reveal itself. Your penny has multiplied to $5,242.88. Quite a leap from just a penny, isn't it? By day 30, you're looking at a staggering $5,368,709.12. This is the exponential power of compounding in action. This is the power of compounding. It's not just about the initial investment, but about the growth of that investment over time. It's the principle of earning returns on your initial investment, plus the accumulated interest. Each period, your investment grows a little more. The same principle applies to your net worth. As you continue to invest and reinvest, your wealth begins to grow at an accelerating rate. The initial stages of building wealth might feel slow. It can be discouraging when progress seems minimal. But as your base grows, the returns become exponentially larger. The growth starts to become more noticeable and significant. This snowball effect is what accelerates your net worth beyond the $100,000 mark. The larger the snowball, the faster it grows as it rolls down the hill. Getting to that first $100,000 is a journey. It requires discipline, smart choices, and a commitment to your financial goals. But the rewards are well worth it. Achieving this milestone isn't just about the money. It's about the confidence and financial stability it brings. It opens doors to new investment opportunities and reduces financial stress. With a larger capital base, you can explore more sophisticated investment strategies. Your money starts working harder for you. And remember the power of compounding? It becomes even more pronounced as your principal grows, leading to faster wealth accumulation. Let's say you save $10,000 annually. This might seem like a modest amount, But the power of consistent saving and investing can be truly transformative over time. You earn a 10% average annual return on your investments. This return rate is quite achievable with a diversified portfolio in the stock market. In year 1, you'll have $11,000. This is your initial investment plus the 10% return. By year 5, your investment grows to $61,051. This growth is due to the compounding effect, where you earn returns not just on your initial investment, but also on the returns from previous years. Still working towards that first $100,000. It might feel slow at first, but persistence is key. Here's where the magic happens. The compounding effect starts to accelerate your growth significantly. By year 8, you surpass the $100,000 mark, reaching $114,374. This milestone is a testament to the power of compounding. But it doesn't stop there. The growth continues to accelerate as your returns compound on an ever-growing base. In the next 4 years, you add another $100,000, reaching $207,946. The time it takes to double your money decreases as your investment grows. Notice how the time it takes to accumulate each additional $100,000 decreases significantly. This is the exponential nature of compounding. This is the power of compounding in action. The longer you stay invested, the more your money works for you, creating a snowball effect of growth. Section 5. Fast-tracking your journey to $100,000. Proven strategies. Reaching your financial goals faster requires a two-pronged approach: increasing your income and optimizing your expenses. Boost your earning potential by negotiating a raise, learning new skills, or starting a side hustle. Even a small increase in income can significantly impact your savings rate. On the expense side, create a budget that aligns with your financial goals. Identify and eliminate unnecessary spending. Prioritize saving and investing. Remember, small changes add up to big results over time. Section 6. Building a resilient portfolio. The power of asset allocation. Putting all your eggs in one basket is never a good idea, especially when it comes to your investments. Asset allocation is about spreading your investments across different asset classes: stocks, bonds, real estate, and so on. This diversification helps manage risk and maximize returns. Your risk tolerance should guide your asset allocation strategy. Stocks offer higher potential returns, but come with higher volatility. Bonds are generally less risky, but offer lower returns. Rebalancing your portfolio periodically ensures you maintain your desired asset allocation as market conditions change. This disciplined approach helps you stay on track towards your financial goals. Section 7. The real estate advantage. Leveraging property for wealth. Real estate has long been considered a wealth-building asset. While traditional homeownership might seem out of reach for some, there are alternative strategies to leverage real estate for wealth accumulation. House hacking, for instance, involves renting out a portion of your home to generate income that can offset your mortgage payments. This strategy allows you to build equity while living rent-free or at a reduced cost. Another approach is the BRRR method: buy, rehab, rent, refinance, repeat. This strategy involves buying undervalued properties, renovating them, renting them out for passive income, and then refinancing to pull out equity for further investments. Section 8. Navigating economic tides. Inflation and market cycles. Inflation is a fact of life. It erodes the purchasing power of your money over time. That's why it's crucial to invest in assets that outpace inflation. Market cycles are another factor to consider. Markets go up and down. It's essential to have a long-term investment horizon and not panic during downturns. Dollar cost averaging, a strategy where you invest a fixed amount at regular intervals, helps mitigate the impact of market volatility. It ensures you buy more shares when prices are low and fewer shares when prices are high, averaging out your cost over time. Section 9. Embracing financial freedom. A journey of growth and discipline. Achieving financial freedom is a journey, not a destination. It requires continuous learning, adaptation, and a commitment to your financial well-being. Educate yourself about personal finance. Read books, listen to podcasts, attend seminars, and seek advice from financial advisors. The more you know, the better equipped you'll be to make informed financial decisions. Remember, the path to financial freedom is paved with discipline, smart strategies, and a willingness to embrace lifelong learning. Start today and watch your wealth grow exponentially beyond the $100,000 mark. If you've liked this video, please hit like and subscribe, and watch the next video to your left about Bryce, China, and the USA economy.